Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week on this Thursday, August 28th, 2025. We are not live from the Bloomberg Interactive Brokers studio today. We are on site at the U.S. Open, right outside of Arthur Ashe Stadium here at the 2025 U.S. Open. I'm Tim Stenovec. That is Molly Smith. She's not just a Bloomberg News economics editor. She's also tennis expert, in-house tennis expert at Bloomberg. Well, our next guest needs no introduction. You know him from the Tennis Channel as a correspondent for 60 Minutes, from his many books, including Glory Days, the summer of 1984, and the 90 Days that changed sports and culture forever. He also joins us pretty much each year at the U.S. Open. We've got Jon Wertheim with us. How are you?
Good to be here. How are you guys?
We're doing pretty well. How's the tennis this year for you?
Good. It's like a 3-week event now. So it's Thursday and it feels like February. No,
is that because of Fan Week?
Yeah, I mean, Fan Week really has gone from sort of this fun novelty for hardcore connoisseurs to this is a 3-week event, and they handed out trophies in week 1 for mixed doubles, and hundreds of thousands of fans came through the gates, and it's really great for tennis. For those of us working, it's it can be a bit of a slog, but no, it's great. We feel like we're like at the halfway point, even though we're only a few hours into round 2.
So as one of these hardcore connoisseurs, I'm going to start using that one. I like that word. Thank you so much. So I will self-proclaimed hardcore connoisseur. I got to hear from you, Jon. What did you think of the mixed doubles format this year? From one connoisseur to another.
Well, I'd be interested to hear your, from where I stand, 12 out of 10.
Okay, really?
Big success. I mean, we sort of had this irony where the defending champion, so a real committed mixed doubles team, won the title over these sort of shotgun marriages of singles players. But no, they filled the stadium. There was great interest. Mixed doubles it sounds great in theory. It's sort of one of tennis's great virtues is the men and women compete at the same time. But mixed doubles has kind of become a bit of a sideshow, and this tournament figured out how to make it newsworthy and noteworthy, and it was great.
Do you think we'll see that from other tournaments because of the success here?
It's a great. I mean, this is tennis in a nutshell. Like the sincerest form of flattery. I don't think Wimbledon, because of the grass, it's a variable.
It would get destroyed.
Exactly.
Well, tradition too.
That's true.
I think the bigger factor.
All right.
Well,
what about Australia?
I think Australia is looking very closely. I mean, getting the players on site for 3 weeks as opposed to 2 is a bit of a challenge. But if Australia doesn't have something similar, I would be shocked.
Well, let's talk about the scheduling challenge. It was particularly a nightmare this year when we had the tournaments in Canada and Cincinnati coming into this, a really bizarre scheduling where those finals were played on a Thursday and a Monday, respectively. Didn't know if they were going to get here on time for the mixed doubles. Can you tell us a little bit about how packed this tennis calendar is and why this summer in particular was really very jumbled up coming into this U.S. Open?
It's like I'm dating myself. Do you remember Tetris? The tennis calendar is just this it's nonstop combinations and permutations, and the players say there are too many events, and these tournaments keep popping up, and it's a global sport. So it's the great riddle of tennis. It has been ever since I started covering the sport. It has not been solved. I'm not sure overlapping events in Canada and Cincinnati is the end. No, you're right. We had a final in Cincinnati
on a
Monday, and then this event started Tuesday, and thankfully the Pennsylvania Turnpike was not crowded. Even flying private and getting here as quick as you can, it's still logistically, it's a bit of a challenge.
Yeah, fortunately, a lot of those players have deals now with these private jet companies. And,
Iga, hopefully.
Exactly.
Iga Swiatek's singles final was played, I believe, 6 p.m. in Cincinnati Monday night. She had a match here in Ashe at noon the next day.
Pennsylvania Turnpike.
They got to figure something out.
Exactly. They've got to figure this out.
Hey, what kind of toll does that take on the players? I mean, I think people romanticize the life of pro athletes a lot, but if you look at the schedule and you understand these people, and I was going to say in some cases kids, are literally living on the road out of hotel rooms for much of their formative years, like that takes a toll.
Makes me think of Amanda Anisimova.
Yeah, now who you reference a player who just basically needed a mental health sabbatical. Just basically said, I'm going to take a break. Maybe I'll come back. Maybe I won't. We're seeing that more and more. I'm sure your listeners can relate to this. You can stay at the nicest hotel, and they can put a little orchid in the room service, and you know what? It's still not your bed, and it's still not your sheets, and it's just there's something that's disruptive. You're dislocated, and you can have all the amenities and drivers and people fetching you water. It's still not home, and I think that's something that people, we all know in sports right now we're seeing how sleep and the study of sleep is getting a lot more emphasis. Does not do great things for your sleep to change time zones and change hotels and different pillows. And at some level, this is an international tour. This is what you sign up for. If you're, Taylor Swift plays all over the world. Like, you can't have it both ways. But the flip side is it's a real challenge. I don't think we talk about it enough. Even with the nicest amenities, it still takes something out of you to be on the road as much as these players are.
It takes a lot of money to do that, too.
Only people at the top are the ones earning enough to actually, make a living, too.
And this is where I wanted to come back, actually, to this mixed doubles tournament, because I think what I would personally love to see, and what I want to hear your opinion on this going forward, maybe this is the way to get mixed doubles onto the map, by having all the singles players doing it as this glorified exhibition, so to speak. But I think sustainably going forward, we want to see the doubles players. I mean, that was really the beauty of Irani and Vavasori winning. And would you want to, I personally, again, I know I'm the connoisseur here, I would love to see the mixed up, the doubles players playing doubles. Does this tour format maybe set the stage to get them back in and get a chance at that bigger prize money? They're the ones who need it.
No, it's a good point. I think it's a fundamental question of tennis, really, of any workplace, right? What is the right sizing? What is the right number of tennis players? What is the right distribution of prize money? And I think getting these singles players to play mixed doubles, it was a great coup, but what did it entail? It meant they had shortened sets, they had only 16 players in the draw, and it spanned 2 days. And I think if they open the draw up and suddenly it's 3 days and suddenly it's 32 teams, the top stars are just going to say, you know what, I'm trying to win the big trophy here. I'm trying to win the singles trophy. It was fun when it was, I knew it wasn't going to take much out of me, but I'm not playing 3 days of mixed doubles before I try and defend my real title.
Of course. Well, that's where the challenge has been of the mixed doubles, is that it was played at the end of the tournament and the singles players kept advancing. And we're like, we're going to pull out now. We're focused on the singles. I want to hear from you this last one here, Jon. We talked to a lot of fans about how, a lot of people, obviously this is such a marquee New York event. They love coming to the U.S. Open. But a lot of people have grown very frustrated about how crowded, how expensive it's become. You talk to so many of the players. What's their experience like being here?
From a play, it's an interesting. You're right. We sort of hit on this. It's so what's the Yogi Bearism? It's so crowded, no one goes there anymore. It's.
I said that today.
Just me and 70,000 of my friends here.
Exactly. At some level, this is great. This is what all entertainment events want, right? You want high demand. You want ticket prices to go crazy. Something would be really wrong if they were begging people to come. The players, I think. First of all, they like the prize money. $5 million to the winner, $110,000 if you lose in the first round. And as you say, this is an expensive sport, and we see the high end, and we see the Carlos Alcaraz and $50 million endorsements. There is a whole cohort of players that are on the other side of the net from Carlos Alcaraz that are taking extra bananas out of the players' lounge so they don't have to pay for breakfast. It's really not evenly distributed, but I think the players are really, they see the investment here. They see this as a great showcase. Not every event on a Thursday afternoon, pick your random tournament spot. They don't resemble this. They're not, marching bands and tens of thousands of fans.
What about from the perspective of fans? Because I've noticed this is my fourth, I've been to more than a half dozen U.S. Opens. Molly, you've been doing the 20, you think?
I think 20.
Yeah.
My first was in 1996.
Yeah, so you were two.
Yeah, we're coming up on my 30th
old.
anniversary.
So you've seen it change a lot. But just in the last 3 years, I remember getting a grounds pass for my wife for $115 day of on Ticketmaster or what have you. If I look at the prices right now, which I did right before because I'm trying to get her a grounds pass for tomorrow, it's like $400.
Yeah.
That's prohibitively expensive. And I went by the box office and they don't have it.
They've done a great job of washing their hands of this whole discussion and saying, hey, listen, this is the market is speaking.
More so than any other year when colleagues came up to me, when friends or even people I had never met who realized I was going to the U.S. Open, they asked me the same question this year since the pre-sale. What is going on with tickets?
Where supply meets demand at a very extreme point. I mean,
you're talking to an economics editor here.
Yeah, I can give you my spiel,
please,
my riff, which is, it's fine, right? We have luxury goods. We have not everyone gets a Rolex at some level. Like, this is what you want, right? You want the supply curve to look like it does here. I do kind of think that you can't have it both ways, and there's a lot of talk here about inclusion, and you have various tributes and kids, and you come here and it's like, wait, chicken McNuggets are $26, my grounds pass is $400. It seems to me you can't have it both ways. Either you are this populist event that takes place at a public park and we want everyone to feel welcome, or you are this commercial and this transactional, which is fine. I get it. We're running a business here, not a philanthropy. But I think it's a little bit strange that they sort of try to they try to play it both ways.
I mean, I guess that would be their answer to that is Fan Week, of course, that this is this, couple days where you can come in and watch for free. But now that has also become increasingly a ticketed event as well. That, it is free to come in here. You can watch the qualifying tournament. You can watch some players practice. You can watch a lot of DJ sets, that's for sure. But, you don't ultimately watch a lot of really what people want to see.
You know why? So Wimbledon does not have DJ sets, but Wimbledon has a lot of this sort of high end, and you've got the private jet set that's come in, but there are 10,000 seats that are set aside for the queuers. People, I mean, you got to spend the night in a field to get these tickets. There are 10,000 fans that come through the gates. Wimbledon, this sort of bucket list location, and the tickets are like $30. Strawberries and cream, the signature dish, it's like £2.50. It's like $3.
Yeah.
And so they've really done a nice job of, yes, you've got your high end and you've got your debenture group and your club seating, and you could spend thousands. You could also spend $30 and have a great day.
That's so interesting because it looks from the outside like such an exclusive event and so much more formal and buttoned up. Jon, we always love hanging out with you. You are a busy guy. Thank you so much for spending so much time with us and being generous with your time. Jon Wertheim. You know him from the Tennis Channel, correspondent for 60 Minutes. He's got more than 10 books that he's authored and co-authored, including Glory Days, the Summer of 1984, and the 90 Days That Changed Sports and Culture Forever. This is Bloomberg Businessweek Daily. Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Tim Stenovec and Molly Smith live at the U.S. Open here in New York City. We're in Queens right now at Flushing Meadows. It's still a windy one, Molly.
Oh, yeah. Oh, my gosh, I just got distracted. I'm sorry. Andre Rublev is walking by in front of us. I am distracted everywhere.
That's okay. That's part of being here. I mean, that's what makes the U.S. Open. That's what makes the U.S. Open magical, that you're just sitting. I mean, granted, we're in the media area, so we're close to the players, but the way that Andre got here was he walked through the entire crowd. Yes, he was flanked by some security, but if you're out there, you can get pretty close to these players, which is pretty cool about the U.S. Open.
I mean, our seat is really, I would say, the most accessible to the players from where we are.
Here's the deal, Molly. You got to stay here. You can't get up and go and talk to the players, just so you know.
I'm good. I mean, we've had a great guest here to stick with, so
we do. So
I'm pretty excited.
Let's talk a little media here, because last week ESPN, which is the largest sports media company in the world, did something that just a few years ago I think many observers thought it would never do. They undercut the traditional pay TV business, which generates billions of dollars in profits for its owner, Walt Disney. Yet, it was time to just go straight over the top. We've got Tim Bunnell with us, Senior Vice President of Programming for ESPN. He joins us here on site at the U.S. Open in Flushing, New York. So in my earlier career, I covered media and streaming, and one thing that analysts told me over and over again was live sports holds the bundle together. And in a few very short years, that narrative has seemed to shift. And I think this is a sea change moment for ESPN to say, you know what? In order to watch everything, you don't need to pay a pay TV provider. What's the thinking here?
Yeah, look, I think it's, I would agree that sports holding the bundle together is an accurate description. But I think what we're seeing now is as you aggregate services, whether it's, whether it's Peacock or whether it's Paramount Plus or whether it's the ESPN direct-to-consumer offering, we're starting to see, kind of aggregation in a different way. But I think where we feel we've done well is kind of manage that transition that you referenced from a kind of a 500 channel universe. Because when direct-to-consumer offerings first were sort of a thing. The leagues were doing their own services. I think that the feeling at the time was, why doesn't ESPN go out and they should just become the Netflix of sports? There's a very good reason we didn't do that right away, and you cited it, Tim, that we were walking away from billions of dollars of revenue, and you have to kind of manage your existing golden goose business with the future. And
well, you also had those negotiations that in those long-term rights agreements that you'd made with leagues that sort of kept things together too, right?
Yeah, I mean, those deals typically, particularly for the U.S. sports leagues, we try to do as long-term deals as we can, and I think the understanding going into them is the world's going to, given the pace of change in the media business, the world's going to change. It's going to look very different by the time these deals, expire. And so we've had to kind of, whether it was the launch of ESPN Plus or our direct-to-consumer service, more recently, you had to kind of manage that transition within deal terms, and that's what these partnerships and these league relationships are all about.
Let's come back to that just for our listeners who maybe don't know the difference between what is the ESPN direct-to-consumer app now and ESPN Plus.
Yeah. So actually one contains the other is the way to think of it. So the ESPN direct-to-consumer app, simply enough, is all of our video services available in one place direct to the consumer. That includes all of our linear networks. It includes ESPN on ABC and what we know today as ESPN Plus. And so when we launched the Plus service a number of years ago, it didn't include any of the linear networks. It was just incremental programming that we, anchored by UFC and a bunch of other big properties. But the direct-to-consumer product takes ESPN Plus and all of the networks and available content we have and puts them in one place. That's called ESPN Unlimited. You can also still subscribe to just ESPN Plus, called the ESPN Select package. So if you're only we would prefer that people not do that. We'd actually like them to go for the full package. But if you're only interested in making it up Bundesliga or something, that's your passion for sports, we have all the matches on ESPN Plus, and you could do just that as well.
When pre-COVID, when retailers were trying to figure out how to respond to the rise of online shopping, there was this sort of thing that people said, which is, okay, what can we provide in the store that you can't replicate online? So Lululemon was doing like yoga classes and stuff to try to build a brand and build an audience. I feel like there's an opportunity with a direct-to-consumer media offering where you can offer something that you can't offer in a traditional pay TV package. We saw that with Peacock in the Olympics, where you could kind of choose different camera angles and watch a bunch of different stuff. I see that being, and granted, I've been watching the US Open linear on ESPN. I see it being promoted, the direct-to-consumer app being promoted in a way that says, wait a second, I kind of would rather be watching this on the app because I get to watch whatever I want.
Yeah, look, I think there's some of it is just having all of the content available in one place just builds consumer choice. I think the other big piece of the app launch and of the product launch last week is the improvements to the ESPN app and the expansion of the app. So whether it's some of the stats and data and fantasy and betting info you can opt into, or the multi-view experience that we're providing, SportsCenter for You, vertical video, and there are a bunch of things that came along with the what I would call the content offering at the same time. And so if you're asking sort of what is it that says to the consumer, I need this product apart from just the content it's provided. It's all these features and functionalities that come with it.
So with the U.S. Open specifically, you guys have had the broadcast rights here for a number of years. This year got a bit longer with the mixed doubles at the beginning, a lot more programming that you guys probably had to offer. Can you talk about what those conversations were like with the USTA when they were talking to you guys about this format, how that goes into planning the rights and the deals around this? Because more airtime, that's got to be a lot more work for you guys.
Yeah, and a lot more fun. I would say that really there was two big innovations that affected us directly. One was the Sunday start, which we were totally in favor of. We've talked about this before, Molly, that I always felt like the U.S. Open beginning on a Monday morning at 11 a.m., it just began quietly. And this is New York City, like it should be a festive opening. And so that Sunday telecast, or that Sunday start, in addition to being good for the tournament as a whole, gives us a window on ABC on Sunday afternoon where we're able to program it there. That allows us to be on ABC opening Sunday, middle Sunday, and the men's final. And then the other big thing was obviously the mixed doubles. So that's another one where all of the Grand Slams that we work with talk about building a week that leads into the tournament that means something. They've done a great job of it here. But mixed doubles was something that, sort of I felt gets kind of buried in the main draw. And so lifting it out, adding a lot of star power to it, and I know that was controversial, but to me that really lent a lot of juice to Fan Week, which gives us a lot of added momentum for the entire tournament.
And you just alluded to ABC. There's so many networks here under the Disney umbrella at your disposal. We have ABC, ESPN, ESPN2, of course all the outer courts on ESPN+. How do you, within the main cable networks, what's the decision-making process that goes into where do we place which courts?
Good question. I mean, up until this year, we actually simulcast the semis, quarters, and quarter semis and finals on ESPN Plus along with. So there was, you could sort of get it both ways. But I think ultimately, once you get to the round of 16 on, it's pretty much, it's all, you can cover everything on your linear networks. It's early in the tournament where you're saying, all right, we're going to focus on Ash and Armstrong, or if there's an interesting match going on court 18, we'll head out there. But to me, the app that we have and the multi-view experience could not be better tailored to any sporting event than a tennis tournament. Maybe a golf tournament as well.
Well, you oversee that too.
Yeah, yeah.
We got to go to the other U.S. Open and talk about that. We're speaking with Tim Bunnell, Senior Vice President of Programming at ESPN. Tim, when you think about tennis actually moving the needle when it comes to people subscribing, where does it fall under the, when you think about sports that are so popular in the U.S.? Because tennis, even though it's really hard to get a ticket here, and even though this draws a huge crowd, like we're not talking NFL, MLB, or NBA here.
It's funny. I think tennis is terrific for us. It performs very well across the board. The skew between men and women is very favorable for us. Often we're sort of, it's a more heavily skewed male network. And so that's an attractive element to us. And I think, we're a network and a business that's about big events, be it tennis or golf or NBA or college football or whatever it is. And so when I look across the Grand Slam tennis landscape, the U.S. Open in New York, in our backyard, all the hospitality that it allows us to provide to our fans and to our sponsors and customers, to me it's punches well above its weight, even apart from its programming value. And so, this year, we've gotten off to a terrific start through the first round. We're up 37%, P2 plus. I feel like the U.S. Open is it's an upward spiral for us. It's.
Speaking of programming value, who just walked by us?
Oh goodness! Oh my goodness! Yeah. We have Naomi Osaka sitting
right
6 feet
next
away
to Molly.
from me.
Wow, that's intimidating.
Painting the picture a little bit for what's going on here.
Yeah,
sorry,
okay. I feel like I've arrived.
You got one more question.
But I'm sandwiched between the two Tims right now, which is the most important part of the program. So Tim, long tennis calendar throughout the year. You guys have the U.S. Open, you have Wimbledon, you have the Australian Open. Just quickly here in this last minute, did you ever think about the French?
Yes, we have. We actually have it in Latin America. Okay. We've had it for a long time. So we're at the tournament. We've been familiar with the French Tennis Federation and Roland Garros for a long time. We looked at it. We look at everything, any significant event that comes up. We look at it. But I think in the end, the WBD put up a big number, and I think that the French Tennis Federation and IMG did an excellent job in negotiating it, and we would love to have it. It does work well with our schedule. It obviously would complete the Grand Slams for us, but what we're learning in this environment we're in is you can't have everything, and you just have to make hard decisions here and there. So, but yes, we love that event.
And your job making that decision easier for the consumer when it comes to options. Tim, thanks for joining us and taking the time. That's Tim Bunnell, Senior Vice President of Programming at ESPN. From the U.S. Open, this is Bloomberg Businessweek Daily. Stay with us. More from Bloomberg Businessweek Daily coming up after this.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenovec. That is Molly Smith. She is Bloomberg News economics editor. We're live from the U.S. Open in the shadow of Arthur Ashe Stadium here in Flushing Meadows, Queens. But we're not forgetting about everything happening with the markets, because we just have shy of 16 minutes until markets close on what could be another record day for the S&P 500. I want to right now bring in Bloomberg News cross-asset reporter Isabelle Lee and managing editor for the Bloomberg Markets Live blog, Kristine Aquino. They join us from our studio back in Midtown Manhattan. Isabelle, I want to start with you and just set the scene for today's trade with, of course, NVIDIA front and center.
NVIDIA is front and center, but the stock is actually fluctuating. But for the broader market, we're seeing the S&P top 6,500, and that's ahead of the PCE report tomorrow. That's all important because that's the Fed's favorite price gauge. Molly Smith would know a lot about that. But really, we're just really seeing recession jitters kind of decline now. I feel like, Kristine, that investors aren't as worried anymore, even if NVIDIA didn't really excite as much as people were hoping.
Yeah, absolutely, Isabelle. I mean, you even forget that recession fears were a thing in markets like just a few months ago, right? I think that was the theme in April when we first got the reciprocal tariffs announcement from the Trump administration. And then since then, animal spirits have just taken over, I feel like. I mean, the fact that we're talking about 6,500 S&P 500 right now, what recession risk, right?
And if you look at the cross-asset signals...
well, that's the question. Yeah, go ahead, Isabelle. Yeah, go ahead, Isabelle. Sorry.
They just really continue to feed positively into the equity rally, Tim.
So I want you to weigh in on that a little bit and sort of cross-asset what we're seeing here, because and this has been a theme really since, I would argue, May at this point. And a ton of people have come out and said, wait a second, why aren't we actually seeing the effect of tariffs on asset prices as a result, like similar to what we saw post, quote unquote, Liberation Day, before the president sort of said the bond market became a little yippy and he did the pauses and stuff like that. But why do you think we're not seeing asset values decline as a result of the increased prices that companies or people, depending on, how you're defining it, are paying for these things?
Well, Tim, I mean, from my perspective, I think it's just a question of timing, right? It takes a while for that effect to be done. I think at the moment it's kind of lying primarily with a lot of the producers and retailers. We've seen a lot of commentary from the retailer earnings recently talking about how they are trying to absorb some of those costs because they don't want to be raising the prices on their customers and turning them away. But I think the warnings that we've gotten from the likes of Best Buy today, right, and Kohl's and a lot of these major retailers also indicating that they might not be able to do that for very long. And so, we might suddenly get that wave of higher prices probably just in time for that peak holiday season, right, Isabelle?
Yes, and you see a lot of adjustments. Victoria's Secret, for instance, their outlook includes an updated estimated tariff of around $100 million this year, double the prior projection. But you see Dick's Sporting Goods, for instance, including expected impact from all tariffs currently in effect. That's the key phrase I'd like to point out, that's currently in effect, acknowledging that things could still change. But Tim and Molly, Kristine and I were actually looking at this fun story. It's titled Hell No. Shock. Okay. $934 bill shows tariff pain to hit shoppers. So basically, there's this gentleman, he bought something, and then suddenly a bill of almost $1,000 in tariffs came in, and he owes this to the U.S. Customs and Borders Protection. Kristine, how will you react if you get something like that? What if you just bought a $50 object?
I'd probably react the same way. Yeah, absolutely not. But imagine buying something and then suddenly getting a follow-up bill. Molly, I saw you nodding. I think you're familiar with this. This is the de minimis exemption that a lot of American consumers have been enjoying up until this week, and that all goes away tomorrow, I believe.
Yeah, this is a brutal development for consumers. What this is talking about lower priced goods coming into the U.S. that if they're under a certain value would not have a tariff fee on top of it. That exemption, though, is now ending. So that's what our friend in this story here that you guys were talking about, who had a nice hell no to kick off the headline, that's what he was reacting to right there. Keeping on this price data, though, Kristine, we're looking ahead to the PCE price data tomorrow. I mean, you've got the S&P setting new records basically every day. Is there really any world in which the PCE report can really disappoint this momentum in the stock market right now?
Yeah, Molly, it's really hard to see given that we are talking about just continued rally in the S&P 500. I mean, unless it's maybe a big shock to the upside, that could be one scenario where markets are suddenly thinking about inflation once again. But, I think the feeling is that we are still headed towards a world of lower interest rates. In the latest Markets Pulse survey, for instance, that we conducted over in the M Live team, we asked readers, what would get stocks boosted again? Would a lower interest rate from the Fed boost stocks, even if it comes at the expense of pressure from the Trump administration? And a majority of respondents actually said yes. So we're in this environment where there is such an impetus to rally based on hope for lower interest rates, which seems like that's where a lot of the road is leading towards. We'll see, of course, once we hear from the Federal Reserve in September. I'm sure, Molly, you're looking forward to covering that and seeing what the result of that is going to be. That's a big one, isn't it?
It's a big one, but I'd say, Molly, there's a lot of data that we're still going to get before that September meeting.
I was just going to say, for me right now, I'm obviously trying to stay in the moment of the U.S. Open, but I'm also thinking ahead to the jobs report next Friday, and then we get those big revisions a couple days later. That's going to be a huge one right now. And again, it's just so hard for me and my eco brain to conceive of right now, the S&P just hitting record after record when we're supposedly in this environment where the labor market is weakening, and maybe we'll see that jobs market and the revisions show as much. Maybe it'll be what was probably perceived as a brief hiccup to stocks because we're in that bad news, good news environment right now, where if we get a bad jobs number, we get a bad inflation number, it's great news because we're going to get an interest rate cut too.
That's where we are again? I feel like we were just there.
I think that's where we've been for the last 2 years.
Did we ever leave?
We're just waiting for rate cuts.
I don't think we ever left, Tim.
Hey, speaking of leaving, we got to go. It is windy here. We appreciate you guys holding down the fort down at a Bloomberg headquarters in Midtown Manhattan. That's our Bloomberg News cross-asset reporter, Isabelle Lee. Also managing editor for Bloomberg Markets live blog, Kristine Aquino, joining us from Bloomberg headquarters. Just have about 10 minutes to go until the close of equity trading on this Thursday afternoon. If we take a look at the S&P 500, we are higher by 0.3% as we speak. Could be another record close today. Taking a deeper look at the industry groups, utilities in the red to the tune of 0.9% lower. Consumer staples down 0.6%. Healthcare down 0.5 percentage point. On the upside, communication services up 1 percentage point. IT, information technology, up 0.8%. And energy up 0.7%.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.